How do you do, ladies and gentlemen? I'm your host, Seth Julian. Welcome to today's morning briefing. We're going to look at gold and its twin sister, silver. Now, gold has penetrated the 50% Fibonacci retracement from the November of 20 high of 2050 per troy ounce of gold. It's penetrated 1840. It's standing now with an 1853 handle. Now, having broken through that resistance point of 1840 and a half, which is the 50% Fibonacci retracement, as you can see, this is the Fibonacci. I'll make it a little smaller so you can see. This is the Fibonacci retracement indicator. It's drawn from the high to the low, and then the percentage retracement is indicated in these colored bands. And they do have some significance, as you can see. That's the beauty of it. You see that these lines mean something. So we're not going to buy the gold above 1840 at the moment. Excuse me, it's 1840. We're going to wait for a couple more bars to accumulate so it's clear that the price is going to stay above that resistance level. So even though it's been penetrated, it's still a resistance level. So we'll wait a few more days on that. I do want to point out that the net, the large speculators are increasing their net long. Again, do not be deceived by the decline in volume. It's a function of the calendar more than it is entirely, really, rather than sentiment. So it's irrelevant at this juncture in time. And so that is a tremendous rise. And since from its low in the beginning of November until today, it's risen 13.7%. But have a look at its twin sister, and one of my favorites, silver. I don't generally trade gold personally. I've not had a lot of success with it myself, but I do trade silver because, and this is the reason, how much has silver moved in approximately the same period of time? It's the 14th of August as opposed to the 4th of October. Rather, as gold started its move, it's raising 37.69%, a much higher rate of return on, and interestingly enough, the small speculators, generally considered to be the dumb money, are also net long. So that's a good solid reinforcement. And look at the growth in the large speculator net long positions. So you can see they are really growing. It's just tipped. It's been dancing nicely above the 20-day moving average, well above the 50, and really quite far from the 2150 handle of the 200-day moving average. It's now 2475. So that's the way we see things, ladies and gentlemen. Gold and silver are on the move up. And we expect this to continue as inflation does not become subservient to rising interest rates. Interest rates are likely to continue to fall, and inflation is likely to continue. And therefore, these precious metals, as stores of value during inflationary periods, are likely to continue their upward path. We say likely because these are speculations, and we could be wrong, and therefore you should be only trading with money you can afford to lose, because there's risk in these markets, ladies and gentlemen, and the risk is precisely of the unexpected occurring. That's the definition of risk. So only trade with money you can afford to lose. And with that, ladies and gentlemen, that sobering remark, I'm going to bid you all adieu. I'm your host, Seth Julian. Wish you all, ladies and gentlemen, the ability to trade with confidence. Chalas for now.